Hello, everybody, and welcome. Today, we are going to be looking at understanding the income and the asset tests. This event is brought to you by Services Australia. My name's Samuel, and I'm speaking to you on behalf of the Financial Information Service here at Services Australia. Now, before we get started, I would like to acknowledge the traditional custodians of the lands that we all live on and pay my respects to all elders, past and present, of all Aboriginal and Torres Strait Islander nations. In today's event, we're going to be looking at how your income and your assets can affect your Centrelink payments, such as pensions and allowances. What is the income test? What's the asset test? What do we classify as an asset? What type of concession cards are out there? We'll also take a look at some information on our online services and how these can make doing your business with us a little bit easier. Now, the information in this webinar is a guide only. It is current as of today's date, being the 28th of May, 2025, and so it is subject to change. Our website is always the best place for further information and to make sure that you're keeping up to date with the current rates of payments and other changes. Services Australia provides the Financial Information Service, also commonly known as FIS. FIS provides free, independent, and confidential information and financial education to help you better understand your options. We provide support to financially vulnerable customers, and this may include, but is not limited to, young people, women returning to work, people transitioning through major life changes, Aboriginal and Torres Strait Islander people, and other people from a range of diverse backgrounds. We can support you with information about banking, investments, taxation, superannuation, changes in your family circumstances, retirement, and aged care. It is information, not advice, meaning that we won't tell you what to do with your money and how and when you should do it. But it is free, confidential information that is available to all Australians. You can access us online, or you can call the number that you ordinarily call Centrelink on and say Financial Information Service when asked for the reason why you're calling. Now, most of our payments are based on a level of income and assets. Income is assessable and it can sometimes be less than your actual income. For example, deemed income versus actual investment income, which we'll take a look at. And we have a look at gross wages, that being your wages before tax, less any work bonus. We also have a look at your assets, which are based on their current market value. Their value can potentially be reduced by any money that may be owing against them. And there are some assets that we don't assess, such as superannuation, that's in an accumulation account if you are under the pension age, currently 67. Our pensions and allowances are paid to you based on which of these tests is going to pay you the lower rate. In some circumstances, you might be paid the maximum rate of the pension or allowance if neither your income or your assets will affect that rate of payment. And again, we will take a look at some examples today. We'll start by having a look at income. Now, income includes a few different things. Gross earnings from employment, including any salary sacrificed income, overseas income such as foreign pensions or foreign investments, some income streams, including defined benefits, market-linked pensions, grandfathered account-based income streams, and some annuities. Any account-based pensions started on or after the 1st of January 2015 are considered to be financial assets, and we cover those under the deeming rules, which again, we can take a look at in a little bit. We will take a look at any net rent from real estate investments, net farm or business income, deemed income on financial investments, trust distributions, compensation, gifts that you may have made in some cases, and more. It is really important to not just assume that you understand how your income may be assessed. Call the Financial Information Service and have a chat about your circumstances to know where you stand. Let's take a look at an example of the income test. So this here is the income test for a single pensioner. For every dollar above $212 per fortnight, your rate of pension will reduce by 50 cents in the dollar. At that rate, the cutoff point is $2,510 per fortnight, or $65,260 per year. If you are over the pension age, the work bonus will apply to any gross income that you earn per fortnight when you declare those earnings to us. The work bonus is an income test concession for age pension recipients who are working. It's also available to those on, say, a disability support pension or a carer payment if you're also over that pension age, again, currently 67. Under the work bonus, the first $300 of employment income or self-employment income, if it is gainful work, is excluded from the pension income test each fortnight. Any unused amounts are then accrued to offset any future employment income, up to a maximum of $11,800 worth of work bonus credits. And those accrued amounts don't expire. So if you stop work and then come back a little while later, you may be able to use those credits up. Now, new work bonus recipients will start their payment with a $4,000 balance. The work bonus is applied automatically to your payments, and it's calculated on an individual basis, meaning that it can't be shared between other people, including members of the couple. The income test also applies to couples, but it works a little bit differently. Income over the thresholds reduces the pension rate by 25 cents in the dollar for each member of the couple. That would make the cutoff $3,836.40 per fortnight, or $99,746.40 per year. The work bonus is still eligible or applicable to each member of the couple on an individual basis. And we do also have some rules for what we consider people to be illness separated, which is where you may not be able to live together due to illness or other health reasons, such as admittance to an aged care facility. We won't take too much of a look at those now, but if you do want to discuss your circumstances, again, FIS is here to help. Now, those on a job seeker payment or a similar allowance may have a different income test applied. In this particular case, for a job seeker payment, any income over $150 per fortnight reduces the payment by 50 cents for each dollar. Once you head over $256 per fortnight, that 50 cents then becomes 60 cents in the dollar. A different income test can apply for those that are single and principal carers. Their fortnightly income above $150 per fortnight reduces the rate of payment by 40 cents in the dollar instead. Similar to the work bonus, there is a scheme called working credits. Now, this is a concession that helps working age income support recipients keep more of their payments while they're working. It is available to recipients of the job seeker payment, youth allowance as a job seeker, and the parenting payment, and also to recipients of the disability support pension or the carer payment if you're not yet 67. Recipients accrue working credits for each dollar of unused income below $48 per fortnight. And when they work, their credits will increase the amount of employment income that they can earn before the payment is reduced. Credits accrue to a maximum of $1,000 or $3,500 for youth allowance recipients that are looking for work. The parenting payment has a slightly different income test again. In this case, the income-free area is $220.60 per fortnight. For every dollar above this amount, 40 cents is reduced from the pension for every dollar of that income. The income you can have before we reduce your payments depends on how many children you have. For example, that $220.60 is for one child, but it will increase for every other child that you care for. The cutoff point increases by $24.60 per child. Now, again, the income test can be different if you are on a parenting payment, but you are partnered. To receive the maximum payment, your income must be no more than $150 per fortnight, and the partner's income must be no more than $1,368 per fortnight. Your payment will reduce by 50 cents for each dollar between $150 and $256, or for every dollar above, 60 cents above that $256 per fortnight figure. Your partner's income up to $1,373 per fortnight has no effect. Any income over that amount will reduce the rate by 60 cents for every dollar. Different limits apply if the partner receives youth allowance or the Austudy payment. This can change again if your partner is in receipt of a payment or a pension. But again, if you're not sure, have a look at our website or come and speak to a FIS officer. Now, those on a study payment, such as youth allowance as a studier or as a student, or say, for example, somebody in receipt of Austudy. For any income between $528 and $633 per fortnight, your rate reduces by 50 cents for every dollar. For any income over $633 per fortnight, the rate will then reduce by 60 cents. Parental income tests may apply if you're not considered independent. So if you're living at home with your parents, then their parental income test may be applicable also. Your rate would reduce if your parental income exceeds the threshold of $65,189. If you're not sure whether you'd be assessed as independent or a dependent, you can speak with either the students team by giving them a call, or again, FIS is here to help. Similar to the work bonus and the working credits is the income bank. Now, students can build up their income bank credits when they earn less than $528 a fortnight. The income bank balance reduces when you earn more than that figure. The income bank applies to any fortnight in which the recipient is a full-time student, including any concessional study load, or an Australian apprentice, even if that's only for 1 day in the fortnight. When income is earned during the fortnight, when income earned during the fortnight is less than the income test threshold, the difference is then held as a credit. That credit can then be used to offset any income that they earn later on. For example, students often work more during holidays or vacation breaks. The maximum income bank balance that can be accumulated for a full-time student is 13,200 credits. For an Australian apprentice, it is a little bit different. The maximum income bank balance they can accrue is 1,000 credits. The income bank credit is not set to zero annually, but it will revert to a zero balance if you lose your qualification as a full-time student or Australian apprentice, if there is a gap in eligibility between two payments that both attract that student income bank, or if you transfer between two payments that both attract that student income bank. So again, let's say youth allowance to Austudy. Now, when looking at assets, as I said before, we look at the type of asset and the value of asset at its market value. We look at any assets that you own both in and outside of Australia. Some of these assets include the typical things like motor vehicles, household contents, and your personal effects and financial assets. Your financial assets will include things such as your bank accounts, any loans that you have made, superannuation, shares, deposits, bonds, and so forth. Other assets that can be assessed include any real estate investments, such as investment properties, or some properties if you, say, for example, live in a rural area and the land that you are on exceeds 5 acres or 2 hectares. We'd also take a look at any farms, businesses, collectibles, and any gifts that you may have made where you've willingly given away some of your assets. When we have a look at gifts, we do apply a gifting-free area of $10,000 in a financial year, up to $30,000 over a rolling 5-year period. Gifting is one of those things that often requires a conversation, so again, visit our website or give FIS a call. When valuing your assets, we're typically looking at its current market value. So for financial investments such as bank accounts or shares, etc., we're looking at its balance. For other assets such as motor vehicles or your household contents, we'll generally accept your estimate. Because we go off the current market value, we won't look at your insured value or any formal valuations. We're looking at what your estimate would be if you had to sell the asset to support yourself here and now. When we have a look at real estate investments, we'll either accept your estimated value, or sometimes we might arrange for a valuation to take place at our own cost to determine its value. To keep your record up to date, we may also apply an annual indexation to the value of your real estate properties. When we review your farming assets, we'll generally ask you for the market value of things such as stock, plant, and equipment. It is important to note that if there is a significant change in your circumstances, it is your responsibility to update these changes within 14 days of those changes happening. Now, usually your home and the surrounding 5 acres or 2 hectares, as I said a moment ago, is an exempt asset. It's not included in the asset test. However, anything above that amount can contribute to the asset test and be considered an asset. In some situations, we can exempt the additional land, known as curtilage, under what we call an extended land use test. But this depends on your age, how long you've lived at the property, and what it is that you're doing with the land. Again, this is something that is best to have a chat with us about directly so we can properly assess your individual circumstances. Don't just assume that you may not be eligible for a payment if you haven't checked in with us first. Now, the family home can sometimes still be assessed or exempted in other circumstances. You can have a temporary vacation of your principal home for up to 1 year, where it will continue to be exempt from the asset tests. Most commonly, we'll see this where people maybe go traveling or holidaying. After 1 year, however, that home will become an assessable asset as it's no longer considered your primary residence, but a real estate investment. If you permanently enter an aged care home, your principal home is generally exempt for 2 years from the date that you enter that aged care facility. In both situations, if you rent your home during those exemption periods, whilst the asset may not be accessible, the income may affect your payment. So it is important to have a chat with us if you're thinking of vacating your home or if you're looking at entering aged care so we can properly assess your circumstances. Some other exempt assets include lump sum accommodation payments to residential aged care facilities, prepaid funerals, cemetery plots, and funeral bonds up to $15,500, and monies placed into a special disability trust, though that amount is subject to a reviewed capped amount. Superannuation is also an exempt asset for payment recipients and their partners under the age pension age, again, currently 67, provided that you haven't yet transferred your superannuation into an income stream, also sometimes known as a super or allocated pension. Now, as you can see on the screen now, there are different thresholds and cutout points for single and partnered people and for homeowners and non-homeowners. Depending on your circumstances, once your assets exceed the threshold, your pension begins to reduce until you're over the cutout point, at which point the pension will stop completely and you would not be entitled to receive a payment. When we take a look at the homeowner status, this typically is people who do own the title for their property. But there are some situations in which we would consider somebody to be a homeowner if they have a reasonable tenure of the place that they are living. Say, for example, those in a granny flat arrangement or some retirement village units. The amount that somebody pays to create this living arrangement will generally determine their home ownership status. Again, this is something that would require a conversation. You can find some information on our website, but it is best to have a chat with us and make sure that your circumstances are being assessed correctly. The asset test for the job seeker payment and similar allowances does work a little bit differently. You'll note here that there is no initial threshold. There's only that single cutout point for both single and couples, homeowners and non-homeowners. Once your assets exceed these amounts, depending on what your circumstances are, the payment will stop entirely. It won't start to reduce. You are either above or below that cutout point. The question, of course, is which of these tests is going to apply to you? To determine your rate of payment, we assess what your rate would be under both the income test and the asset test that we've just discussed. What this means is that we assess both your assets and your income at all times. We then compare the two tests against each other to see which is paying you the lower rate of payment. So for example, if your assets are higher than your income, we'll pay you under the asset test. If your income is higher than your assets, you'll be assessed under the income test. This comparison happens automatically in the background every time you update us with changes. And again, you are required to provide us with notice of your significant changes within 14 days of the change happening. In addition, it is important to note that a person's rate can change from the income test to the asset test or vice versa, depending on what's happening with their income and assets. This is particularly relevant for somebody with varying incomes, say somebody that's working casually or seasonally. Now, if you're not sure where to start, our Payment and Service Finder is a great tool for you to use that you can explore payments and services on. It asks you several questions about your circumstances, about your income and assets, your age, some of your living arrangements, etc. And it will then suggest payments for you to explore further. The Service Finder is a great way for you to learn more about the government and community organisation support available to you in your state or your territory. If you haven't had a look at the Payment and Service Finder, make sure to head to our website and take a look. Another great resource to have on hand is the MoneySmart website. This is a government-funded website that you can access for free information and financial education, similar to FIS. It's full of great calculators, tools, tips, and other resources covering a range of topics from budgeting and super to taxation, debt basics, you name it, it's all on there. Make sure you have a look and see what's there to give you a hand. Now, some payments will come with concession cards, or indeed, if you're not eligible for a payment, you may be eligible for a concession card under its own set of rules. Some concession and healthcare cards are automatically issued to you depending on the payment that you're on. They can help you access reduced pharmaceutical costs, as well as other medical services funded by the Australian government. The cards may also give you access to other concessions provided and funded by state and local governments. Your state or territory government and local council may offer you more by accessing lower utility bills, property and water rates, public transport, motor vehicle registration and license fees, travel and train fare, those sorts of things. You need to check with your local areas to see what benefits you may or may not be eligible for. If you don't ask, you won't know. So make sure that you ask if your concession card is eligible when you're having a look at paying for things if you hold one. The Commonwealth Seniors Health Card is a concession and health card available for people who are of age pension age but are not entitled to an age pension or similar income support payment due to their assets or their income. Now, there is no asset test for the Commonwealth Seniors Health Card. The income test looks at your adjusted taxable income and any deemed income from your income stream balance. What we mean by that is that we have a look at your taxable income based on your latest tax return in the last 2 years. And then if you do have other income, such as deemed income from your income stream balance, we may then add an additional income to that to determine whether or not you are eligible for the card. This can include things like foreign income, reportable superannuation contributions, and more. Again, if you're not sure, you can test your eligibility online, or you can have a chat with us. The income limits for the Commonwealth Seniors Health Card are on the screen now. Remember, there's no asset test, just these income limits. For a single pensioner, you're looking at $99,025. For a couple, it's a combined $158,440, Or if you are an illness-separated couple where you have to live apart due to ill health or admission to an aged care home, as I said before, that income limit increases to a combined $198,050. If you're currently in receipt of an age pension and your circumstances change, meaning that you're no longer eligible for that payment going forward, it may be worth having a look to see if you qualify for the Commonwealth Seniors Health Card under this different set of rules. Now, particularly in retirement, you may want to do some traveling. If you do head overseas, it is important that you let us know before you do it. You can do this online or you can give us a call. The impact that overseas travel has on your payment is largely determined by what kind of payment it is that you're receiving. And this is why we ask that you let us know your plans ahead of time so that we can make sure we're assessing your payment correctly, but that you also understand how it may change or be impacted while you're overseas. The best way to claim a payment, concession card or other service is always online. To do this, you'll need to have a MyGov account and then link your Centrelink account to that MyGov. If you need help doing this, our staff can always assist you. If doing things online is perhaps not your thing, there are other ways that you can complete a claim, sometimes over the phone or in person at one of our service centres. If you would like help learning about our digital services, we can help you with this and we can get you started and show you the way. It is important to take the time to prepare when making a claim. Our website has step-by-step guides on how to prepare to lodge your claim, the kind of documents that you might be asked for, and I would encourage you all to take a look at it so you know what you might be in for. Now, if you receive a payment from the Department of Veterans Affairs, or if you're after any information in relation to the Department of Veterans Affairs, you can contact them on 1800-838-372 or visit their website, dva.gov.au. It is possible that some people may receive an age pension or a service pension paid by the Department of Veterans Affairs, depending on their history in the Australian Defence Force. If you're not sure where you stand, give them a call and have a chat. Now, some people may need a little bit of a hand when dealing with us, whether it's necessary or whether sometimes they just like to have a bit of help. We do have a number of different options and different arrangements that you can put in place to authorise a person or an organisation to act on your behalf and help you out when dealing with us. You can choose to have a payment nominee, somebody who receives the payment on your behalf, a correspondence nominee, somebody who receives a copy of your mail from us and is able to then help you make updates and changes to your record. You can be a combination of the two and have both of those arrangements in place at the same time, or you could be a person permitted to inquire or make updates to the record without having to go down the correspondence nominee path. Now, if you do put into place one of these nominee or person permitted to inquire or update arrangements voluntarily, you can continue to make contact with us. Having somebody there to help you doesn't prevent you from being able to do your business on your own. It just means that you've got a hand if you need it. It is important to note that if you stop needing somebody else's help, you need to tell us so we can cancel the arrangement. Otherwise, we won't know and that arrangement will just stay in place. Services Australia has a range of online tools and self-service options to assist you, including our apps and our online accounts. We've already spoken about MyGov, but it's worth noting that MyGov does have a mobile phone app that you can download onto a phone or a tablet, and we do have other apps called Express Plus apps. Now, these can be downloaded from the App Store or the Play Store, and the MyGov app allows you to access your government services all in one place from your pocket while you're out and about on the go if you need to do something in a hurry. Again, if that's not quite working for you, you can still continue to access our services by phone. But using our digital services means that you are the first in line every time, and you don't have to wait on the phone, you don't have to make an appointment in an office. As we transform our services and our digital first delivery expands, Services Australia are developing and refining our products and services to allow people to manage their affairs in an easier way using these digital channels. Using self-service options is a way you can choose to complete your business with us quicker and easier. So if you're not sure where to start, again, you can come and see us and we'll help you get started on that path. There's always help available. Now, we've spoken a little bit about MyGov, but we'll just cover it off in detail. A MyGov account lets you link a range of Australian government services with one username and one password. With a MyGov account, you can access all of your online accounts with Services Australia. So that could be Centrelink, Medicare, child support, NDIS, as well as other government online services, such as the Australian Taxation Office, etc. As I mentioned before, we do have online services and resources to help you navigate them. We have online guides and videos available to help you make the most of your online accounts and Express Plus mobile apps. These do include step-by-step instructions for many common self-service transactions that you can do in those online accounts. So make sure that you jump online and take a look at those. And again, Fizz is here to help and is here to support you. We aim to improve your financial literacy and your capability, boosting your confidence to help you make financial informed decisions on your own. We do host these webinars, and there are a number of free webinars available on our website and our YouTube channel, just like this one today, that cover a range of different topics. From here, you can book into a live webinar, see what's coming up, or watch a recorded webinar depending on your circumstances or your situation. And today's webinar will be up shortly. There are also another range of services that can assist you depending on your circumstances. For example, we have our multilingual phone service for those that might like to access us in a preferred language, the Indigenous call centre for our Aboriginal and Torres Strait Islander Nations customers, a social workers line, aged care specialist officers, grandparent, foster and kinship advisors, farmer assistants, and of course the financial information service. Now, if you are looking to access the financial information service, there's a number of ways you can do this. We spoke before about how we have a phone service. You simply call the number that you call when you are wanting to speak to Centrelink, and when asked why you're calling, say Financial Information Service, and you'll be directed straight away to one of our Fizz offices all across Australia. We'll aim to try and resolve your inquiry at that first point of contact, but if you have a more complex situation, we can always look at booking you an appointment, whether that be face-to-face in our service centres, or we can have a look at a video chat appointment, which is just like a face-to-face appointment, but from the comfort of your own home over the computer. We also attend community events where we can provide the community with information and educational presentations. And again, we have our webinars just like the one today. And please go onto the website, have a look and see what is there for you. I'd like to thank you all for your time today. Thank you for watching. This particular webinar will be followed shortly by an accompaniment called Understanding Deeming, where we'll go into the income and asset test and how deeming relates to that a little bit further. Keep an eye out for that. It will be up on our website and our YouTube channel alongside this webinar shortly. Until then, stay safe and we will see you next time.